Hi, Warriors. I heard the owl hooting this morning, and it was asking me, are you ready to have a face experience? How you doing, Simon, Marta, team? How's it going?
Toot-a-woo! Toot-a-woo!
Hey Blake, Dale,
That was a
everyone.
very bad impression of an owl. Come on, who did
Who,
that?
huh? Who did it? Come on, take
That was Ryan.
I'm
All
not
right,
going to
Ryan.
admit it now. It was so bad, I'm not going to admit to it.
All right, and it is a face experience. Show your face, guys. Good trades, good calls, and this is where everyone here gets a taste of our premium content. Just a taste. So let me just start off with S&Ps. I talked about the potential for a bear raid. 39.5 is a pretty important pivot in my work. I believe that the market could possibly sell off to this fan line at about 3,700, maybe into the Fed. To arrest the decline, we'd have to start closing back above 39.5. And the real interesting action is this is happening with risk off and the dollar is weakening at the same time. Haven't seen this in a while. I think it did it for a while before the Brookings speech, but the Brookings speech just was one more jiggle. You have to respect how the metals are holding up. Maybe we get a 3 while the market's selling off. Silver even better, but you do have to be aware of this 22 area should it give up the ghost here. So that's the way it looks to me. What was behind the big recovery, Ryan, in cable and euro in
Yeah.
the last half hour?
Yeah, I think it might be you guys coming in and coming to the table because everything looked a bit risk off this morning. Dollar was high across the board. Bad China data overnight, I think, did a bit of the damage there. I think we're still in a bit of the washing machine though.
Yeah, commodity currencies not responding like the European currencies. Aussie, comes back to maybe up 8 pips on that, and the Canada's still higher. So yen, what do you think? We're coming off pretty dramatically there too. We can get another shot down towards the low, Ryan.
Yeah, I think it might be a push to get all the way down to sort of 134s, but I can certainly see us maybe getting back into the 136s and see where we go for there. Just keep looking at those lows. We seem to be stepping up a bit, don't we? At 133 lows, 134, then the 136. It's trying to climb off the mat. I'm still not keen that it goes all the way back up 140s or anything.
This risk off move, what kind of stands out, not kind of, does stand out to me is it's happening without interest rate pressure. It's happening without a strong dollar. And really, no one really is coming up for a reason except recession talk and the Fed, maybe fear of the Fed next week. It's pretty bearish action now. I don't think that we're going to take out the October low. But, we all talk about what are the reasons, why is the market going down? The main reason markets go down is so that the pros could accumulate at better prices. And I think that's what's going on, is that you get a bear rate so you could buy things like maybe the miners cheaper and things like the semiconductors cheaper. Like here's the semis. They had a pretty good pop. So, S&Ps could go to 3,700 and set up buying opportunities in multiple sectors. I think that what I'm doing is I have a shopping list. And when the S&P gets down towards 3,700, things I've wanted to buy, maybe some uranium issues and maybe some semis, I use this break to be a buyer. And I think that it's sometime in December, maybe it's just down and dirty into the Fed, and then we get a turn. So, go ahead, buddy.
As I say, it's strange. You're saying stocks are down as the dollar's falling as well, but then you look at yields because you think, well, yields must be moving as well when they're doing nothing.
Yeah. 355
I said
still
this,
on the 10-year. Yeah.
yeah, I said this morning on the flow show, you know, when you do the same, Dale, you come in, you look at markets, you think, all right, dollar's moving. So what's moving the dollar? You look at oil, you look at yields, you look at this, you look at that, and you try and formulate a picture of, you know, what's driving what. But you look around
I'm
this.
glad you brought up oil. I just want to warn the bears that we have a 3 drive developing here. Okay, it's pretty classic. You know, we're diverging from this low here, right? We confirmed this low. We've made new lows. We haven't confirmed, but on this drive right here, you have a 3, kind of a fractal of what can happen. You know, this could have been on a larger scale, 1, 2, 3, and then on the third, you have 1, 2, 3. So be careful about oil shorts now. I think that there could be a turn developing here. So I don't know what that's going to do for the market. Maybe that helps the market if oils come back. But yeah, I think there's a lot of great buying opportunities being set up by weakness in equities. You know, like
Hey, good morning, everybody.
Who's that, Kman?
Yeah, it's me. Hi.
I never know when you're around anymore, man.
I'm very around. Oh no, around. Sorry. Around. No, I showed on the flow show this morning as well. I've got a big red line around that 17,290 on oil. And we just tagged it this morning, perhaps.
What instrument?
On the WTI that you just.
Oh, okay. All right.
72.90 big level. If that breaks and holds below, I think then we're going into a much longer term equilibrium zone, perhaps around 63, 67, and that will be a zone where the SPR buyer should be around. But I'm not sure if it's going to get down there. But 72.
This market's not going to let Biden fill his limit order.
Who knows?
Yeah, it won't.
It would be a first, but who knows?
Yeah, well, okay. Well, maybe it'll be a first, but you know, I don't think it's going to accommodate.
So
accommodate them. And anyway, what the election did, though. So the Democrats, that's news, isn't it? They maintain control of the Senate. So let's go to Stel. What are you thinking is happening here? Are you a little bit surprised with risk off how well silver's holding in there?
Well, metals are definitely doing well, comparatively speaking. And we did have a headline that China announced that they've increased their gold stockpiles. That's probably giving a little bit of a lift. And we know that China are not telling us the whole truth. So, you know, they said they have X amount. You should probably multiply it by 2, I'm guessing. But anyway, so yeah, metals are still doing well, but you know, when risk off happens, they find it very hard to go against the trend. So maybe so far they're resisting, but if we do see continued breakdown, and Blake posted a really nice chart of the S&P breaking down on the by Twitter, I think, but on the chat room as well.
Like
first.
the trend line, this trend up,
yes,
yeah, breaking this. So this is what was it? The chart of the day?
No, I think he posted on the chat room earlier today, but it is breaking down. If you see that, there you go.
There you go.
So if that targets, well, I don't know, 3,800, something like that. Well, let's see. But if that keeps going, I'm going to find it hard to see how metals are going to resist. I still think they're going to continue to possibly outperform, but I don't see how they're going to resist, like how gold can stick above 1735 if we do get a proper leg lower in risk. You know, let's see.
Saw an interesting chart on CNBC that I think has longer term implications. You know, the banks haven't really been performing. They've been under pressure, and they showed a certain bank index against gold that's rolling over and breaking down. So gold outperforming the bank shares, and the banks are kind of the weak sector in the market right now, and gold beginning to outperform. If gold starts to outperform S&Ps, that's another, it's like a major shift, right? That money is flowing out of financial assets into gold. So
Yeah, and if you look at the ratio between S&P and hold on,
Gold.
let me. Yeah,
you have the chart, man?
hold on.
Because you know what we're doing right now, Stel?
What are we doing?
We're in the middle of a face experience.
Yeah, hold on.
Right now, it's happening.
Let
You
me.
guys know out there that you're having a face experience today?
Here we
Huh?
go. Let me share my screen.
Oh
There you
yeah.
go.
All right.
So here's the S&P
Oh, okay.
compared to gold.
Yeah.
Okay, maybe
Yeah.
we're not quite there yet, but
Yeah.
if you look at the grand scheme of things,
Yeah.
we haven't been this high. Well, we've been high historically, obviously we're higher during the .com and all that,
Yeah.
but it's been a decade now where we've been at high levels, and if this breaks, then
Yeah.
who
Important.
knows? Who knows? Yeah.
Yeah. So, that kind of would be saying, who wants paper anymore?
Yeah, I mean, people
Huh?
talk about physical versus paper and all that,
Yeah.
but and the gold silver ratio, it seems to have broken. Maybe it's going to retest, but we know how this works. When this ratio goes down, the metals outperform. When it goes up,
Yeah.
it's the other way around. So yeah.
Okay.
Let's see what happens. It's interesting. I think we're gonna have a few directionless, let me put it this way, trading sessions going into the Fed. We did say that the risk was for a retreat in risk, a an increase in yields and the dollar going into the Fed, and we are seeing that. How will we trade during the next 5 sessions? I don't know. I mean, I think we're going to be, as I said before, directionless. One thing that seems to have direction or
Bitcoin.
almost is
Bitcoin.
cryptos. Let me get that here.
Well, hey, Stel, while you pull up the cryptos, and good morning, team.
Hello.
And good morning, everybody. Hey, just as you're pulling up crypto, we have the Fed next week, but between now and then, we have producer prices, we have University of Michigan consumer sentiment, and then we have CPI on Tuesday. I think that's going to really feed into how the Fed reacts and Powell's tone going into the Fed next week. Does anybody, Kman, Ryan, Dale, you guys, Steve, any of your thoughts regarding that? Because I don't think we're going to have a quiet market going into the Fed, to be honest. That's the way I'm looking at it.
I agree about the CPI. The others, I think they're going to go into the background as we go closer to the Fed. But yeah, CPI is going to be very important. I agree.
Okay.
I agree. But anyway, I was showing cryptos, and look, Bitcoin is about $1,000 away from the lows. So, we've talked about this for a while. This, what is it? 3 weeks, 4 weeks of consolidation. It doesn't look good any way you look at it, and unless the Fed goes ultra dovish and, risk gets bid to the moon, I see this breaking and resolving lower. I mean, I don't see any other way.
What's your next target underneath it?
12, I think it was about 12K, 10 to 12K. We have this these previous highs here. So this zone is what, 12? Yeah, 12 to 13K, I think is the next target. But the problem is that if you look at the chart, there's absolutely nothing between these lows and 12, 13K. It's just a pocket of air. So yeah, if you're long, you have to be very, very careful about your stop. And we talk about stops all the time, and especially in cryptos, it's difficult to get filled on your stops. So you have to put that into consideration when you're trading.
Okay.
Anyway, that was my 2 cents.
I might buy 1 Bitcoin down there, Stel, and put it in a wallet, not trade it, just in case.
You know what? For a trade, I might do that as well.
Yeah.
I think that level around 12K is probably going to be a nice risk reward long. But
what other wealth can you put in your pocket and go anywhere with it?
Yeah,
Maybe,
I don't know.
Gemstones.
A diamond, yeah.
Yeah, gemstones. But I mean, try and lug your silver around with you. You'll end up with double hernias, bro. You know what I mean?
Yeah.
Anyway, so those silver coin bags, I used to do curls with them. How about you, Blake?
All
I'll
right.
pass you
Well,
the
hey,
Put it on a broomstick.
hey, and I want to say good morning. Like I said, good morning, everybody. But I want to say that we have the Bank of Canada coming up this morning, and I don't know if we got Ryan and Kman. Did you guys and Stelius? Did you guys give your thoughts? On the Flow Show regarding the BOC today?
No, we ran out of time.
Oh, did you really? All right. Well, hey, what are you guys thinking here? Because let me pull up a couple of things as we're discussing. So with the dollar CAD, I think this is a really important level that we're at. This is the 618 of the move that we've seen from the highs in October, down to the lows. We had this little triangle breakout. We just hit the 618 to the pip overnight. The 137 level was the high. You can see that was the high overnight. That was also the 618. But it's interesting because it's not just the dollar CAD. It is also, like, you want to take the Euro CAD. We have this inverted head and shoulder pattern that has obviously been playing out, and I would venture to guess that we're pretty close to being complete here. So, when you have moves that look like this, and you're reaching for, some resistance levels, I'm a little careful, I want to be a little careful selling Canadians here. And then also, if you take like the Canadian yen, which would be, one of the other yen crosses, which have obviously been moving. It's actually been one of the only yen crosses that have really moved aggressively, but you can see the Canadian yen, it's been consolidating for the last, 5 trading sessions or so down here. With all this movement, and you've had crude oil move so aggressively, I don't know if I really want to, be selling Canadian dollars here ahead of the BOC, knowing that that the Bank of Canada might not be dovish. They might, hold the line, like, let's just say the RBA. So with that being said, I actually sold some dollar CAD this morning, and I put my stops above 137 level because I think the risk is clearly defined at this moment, because I'm trying to get a head start ahead of the Bank of Canada. But
Want to hear something funny, Blake? We are at the 618. We're also at the 618 from the 2020 highs to the 2021 May 2021 lows.
Oh, so if you go like this,
plus or minus 10 pips. So, for that kind of move, we are basically at that level. Because remember, it was from 146.6 down to 120. So that's a pretty big move.
It is pretty key level. So
confluenced having a face experience.
So I wanted to hear from Ryan. What do you think about the Bank of Canada today? Are they going to, because they're the first central bank of, like, we have, who's all meeting over the next few days?
India tightened yesterday, if that matters.
That does, India. I guess. It does. We still have, the Bank of England. We have the ECB next week. We have the Fed next week. We have Norges Bank next week. I'm trying to think of the other bank that we have. There's a couple other central banks that are happening next week. I have to pull them up right now, and I'll tell you who they are. But I mean, okay, with all these central banks, the Bank of Canada is going to be kicking it off today. So what do you guys think here?
I think the risk is twofold. Looking around, no one knows if it's going to be a 25 or a 50. The expectations on the calendars are for a 50, but the probability pricing is pricing 65% for 25. So aftermarket don't know whether it's going to be a 50 or 25, and I think that could shake things. I think there's big two-way price risk here. Could be one of those situations that we see 134 from here, or 138, 139 on the other side. So there's no press conference or anything, so it's just going to be the headlines. So I think if they're hawkish, unhawkish, dovish, it's going to be a big price mover.
All right. Well, that's good. We want volatility. So, Kman, what say you?
Well, Ryan took my lines for what is possible, and Stelios took my chart from this morning in the chat room, so I don't have much to add.
You know,
I just
you
say
should
that
really
136,
you should lock your stuff up
level
better.
on the dollar Canada, and that the data would be supportive for a 50 BPs, because besides household spending coming off a little bit, the rest of the data in Canada have been holding up pretty well. We had the GDP higher, the job reports are still supporting, but then McClem has been a bit split tongue of late, so everything is really possible. Base case 50 and not such a hawkish hike. Let's
Oh,
put it that way.
okay. All right. Well, if they're not going to be so hawkish, then maybe the dollar Canadian will trade back up towards the 137 level, because you know.
Yeah, but on the other hand, if they do 50, then the actual rate hike is still there. Then they move well over 4%, right? They move over into the 4.25% mark, and the market right now is pricing not as much in the short-term market, so there may be a little catch-up to do. So it's really an open play for me.
All right. Well, I think it's something worth noting. And Marta asked, about the New Zealand Canadian. It's not a pair that I've followed recently, but I think we could take a look. It looks really, really like we've had a nice extension here. Very overbought, but overbought can be more overboughter, right? And it can get more overboughtness. We all should know that. And we are at the 618 retracement, so pretty key resistance here. So you got to be a little careful. I don't know if I'd be chasing longs here, but that is a very strong move. Which, if you could have said that was a really strong move at the 38% retracement, at the 50% retracement, all you have to do is go like this. Like when we hit the 38% retracement, you're like, oh, look, we're at key resistance. Oh, look, here we're at key resistance. Oh, look, we're at key resistance today. Can we stretch further? Absolutely. Markets always can. But we are at the 618 fib, and we have some horizontal resistance coming in. So I would say that's a risk. So if the dollar CAD doesn't break above 137, you might have a chance of it stalling up here. That would be, but if we break 137 and the dollar CAD, the New Zealand Canadian is probably going to continue higher. Have you guys seen the Aussie Kiwi? Because you want to talk about a strong currency, look at the Kiwi versus the Aussie. We are, stretching lower today, and we're at channel support, and we're at a 78% retracement, but very, very big move here. Hey, I was going to bring up
the pair much for ages. This one,
what?
Aussie Kiwi. Everyone's looking at Aussie Kiwi at the moment.
Oh, I'm
like
long.
That background.
I'm long here. Yeah, I've been buying it down here because I think it's oversold. But my stops are pretty damn close too.
Blake.
Yep.
I've put it already on the chat as well a few times. There's a trend line coming in from the 2020 lows.
Ooh.
And that's coming in around 105, 1520 right now. If you want to use that as a bit of a safeguard for catching knives.
Oh yeah, that's it's funny because my stop is actually below my stop is above that. So chances would be that I would get my fingers cut off and then it would bounce. So, but hey, look, that's a really good that's a good view. So thanks for pointing that out, Kman. I might have to adjust some position size as a result. We have about 7 minutes before Dale has to take over here, but I wanted to ask you guys how you felt about risk, because the S&P. I was having this conversation with Chris Weston from Pepperstone last night during the trade-off, and we were talking about de-risking ahead of the Fed. But my question to you guys is: do you buy it here? I mean, do you buy stocks down at these levels because you feel that that the Fed is going to be a little bit more accommodative going into next week after the inflation data is released? Let's go around the horn and see what you think. Dale, I know you've been calling for a move back down to 38, 3,700. Do you still feel that way?
Yeah, unless we close back above 39.50 to arrest the decline. And I don't.
Okay,
think
so
that's gonna happen.
if we bounce back up here, you wouldn't want to be short.
If we close over 39.50, I wouldn't be short anymore.
Got it. All right. And
Okay.
by the way, we do have Greg Horvat here, and I'm going to give him a couple minutes to talk about, maybe some Elliott wave setups. But Ryan, how do you feel about the S&P and risk aversion here?
Yeah, I think we may need to be careful if we are switching to a global growth, recession fears. That's obviously not good for stocks. So that's going to probably trump buying a dovish sounding Fed. So I'll be careful. I wouldn't want to buy it here. I don't think I want to touch it much before the Fed actually. So no, I'm not a buyer here.
All right. Fair enough. How about you, Kman? I mean, we've had a pretty good sell off from these highs. I mean, we've moved down 4%. What do you think? Are you going to be a buyer down here?
No, not for the time being. I am, as I've been saying a couple of times, I am more of a range. I've got more of a range feeling right now. But
something like this.
Yeah, the 37, yeah, exactly. 38, 37, something there. Yeah, that one. I'd say that's the playground that we are in right now, the sandbox.
Stay in your sandbox, kids.
Exactly, stay in the sandbox, and that's more my feeling right now. On a lot of instruments, actually. Even on metals and things, and I am constructive on the metals, but then I need to hear more real openings from China, and we may be closer to it now because more cities are planning for to at least stop mass testing and all those things. So we may get a little closer to that. So that could be a positive for stocks as well, but then you have the Caesar effect. Are people not going to buy more Asian stocks than they would buy US stocks, for instance?
Well, they have been lately, for sure.
Exactly, okay. And this rebalancing may go on for a while. That's why I think it's more of a range play in the US equities right now.
All right. Well, thanks, Kman, for your thoughts. Now we only have like a couple minutes. I wanted to bring Greg Horvat in, but before I do so, if you guys want to know like kind of the trades that we're taking, like I'll just give you an example. Here's the trades room, and you can see like people like myself and obviously Kman here. Like I just sold dollar Canadian and stops above the 137.10 level. I mean that's like trade that I just did. Well, that was 45 minutes ago. And currently I'm up 24 pips in it, and I'm sitting in it. But I put screenshots in when I'm closing, and you guys can keep up to date on what I'm doing and other traders are doing here. Like these are positions that I closed yesterday. So and that's just the trades room. Then you have a general chat room, Flownomics room, but that's all inside the ForexAnalytix community. So if you guys haven't had an opportunity to take advantage of it, make sure you do so. It's a great trading community where we all are. We just don't talk politics or religion. That's very, very off limits in our community. We just talk about the markets and sometimes what's happening on
or football now that the US
and we have a world. Yes, we have a World Cup a whole discussion going on, and it's very busy. So anyway, check out ForexAnalytix. Greg, what are your thoughts here? I just want to give you a couple minutes just to look at the markets. What are your thoughts from an Elliott wave point of view? And good morning.
I see the US notes trading at resistance. Actually, they are testing those previous lows from June. We are right there right now, but the S&P 500 is already pulling down now. So if the US notes will come into the pullback, I think that this will support the US dollar index, which is actually coming out of the wedge. I think that we'll see further rally, and I'm afraid that stocks will see more weakness.
So when you say wedge, you must be looking at it like this.
Yeah, I have more short term. Yeah.
Yeah. Okay. I'm not quite there yet, but I see what you're looking at.
Maybe we can retest the lows, but eventually I see a wedge here. Yes.
Hey, you were just talking about the dollar yen to me in the chat room. We were just you'd mentioned on I posted a chart on the dollar yen, how it's struggling around the 137.50 level because, and just so you guys can all see it here, let's go to the dollar yen and I'll show you the chart that was actually posted this morning. There's the chart, the struggle near previous support, current resistance, the analysis that went by that, right here. And then Greg jumped in and you have a little bit different view via Elliott waves, which you can find right on ForexAnalytix. What are your thoughts here with your Elliott wave analysis?
Well, you can see that we completed 5 waves down there, and we are currently reversing and testing this upper trend line, and the small current bullish lag can very nicely be counted in 5 waves. So typically, even if just short term, this means that lows are probably in place and that correction could extend higher, ideally back to the former wave 4. So 142.30 is the ideal resistance.
Awesome. Okay. And you think we can actually correct all the way back up to 140 to 142?
Yeah.
Man, I like it. Okay. Well, those of you that are looking to maybe buy dips in the dollar yen, I know Kman, you love to trade the dollar yen. Maybe that's something for you just to be thinking about. Greg, any other insights today ahead of the Bank of Canada before I let Dale take over here?
Well, I still trust more in the current trend and what is going on. I mean, we have crude oil coming sharply to the downside. We have gold metals in general also showing some short-term tops. So I think that we could potentially see more weakness on commodity currencies. And if we see some pullbacks on dollar CAD, I just think that this will be the temporary and the trend will win and that commodity currencies will see more weakness.
Okay. All right. Fair enough. Hey, I appreciate you being
Wizard
here. And
Wizard called the high in euro at 106 within 5 pips. Nice call.
Grega?
Nice call, Grega.
Grega's great like that. And for those of you that don't know Grega or, know his analysis, it's all here in the Elliott wave analysis. He updates for us once a day on all 30 instruments that are covered on ForexAnalytix. So
he's the luckiest trader I know, Blake. He's so lucky in the market, isn't
it? With hard work comes great luck, and that's where he is. So
you're just
hey
lucky,
guys, Dale, I'm going to turn it over to you. I know you have Angie here, so thank you team for being here. Thanks everybody for your support and being with us every day. Make sure you check out the Trader Funding Program. We actually just had somebody this morning while I was sleeping pass their assessment, and I just saw it come through this morning. So welcome to the live. That person is now accessing our larger accounts. I haven't actually checked which account size he or she has passed, but
changing lives,
accessing some larger accounts. What?
Changing lives.
We're one trader's life a day, trying
at a time.
All right, man.
All right, buddy. So
thanks,
thank
everybody.
you, team. Thank you, Grega. Thank you for adding to the F.A.C.E experience today. Angie, are you ready to jump into a F.A.C.E experience right now?
Oh, for sure. I was born ready.
Good one, Angie. All right. So welcome back.
Thanks for having me. I'm excited to be here. Lots of stuff going on, it feels like. But
yeah, and I really want to talk to you because I've been kind of pounding the table that the grains that everyone should go out and buy a silo and take delivery of grains because these prices may not be here that much longer. Definitely the beans have been the star of the show. What's behind this move in, grains being under pressure? Was it the strong dollar that's no longer there? But the beans look like they're trying to break out here, Angie, on a weekly basis.
Yeah, well, beans have a little bit of a unique story right now, just simply because we have a situation in Argentina with a pretty significant drought that's developing. Okay. And so, what we've seen in now are the bulk of Argentina's production season falls basically January through March. So from an overall standpoint, when it comes down to it, we still have some time to see some corrections. And the thought is that we see La Nina break down eventually, and that weather kind of improve. But as it stands currently, their production is being threatened by a pretty massive drought happening in the region, and just really some extreme heat this week, dryness, things of that nature. And so Argentina is the largest meal exporter in the world. They actually basically double the US when it comes to meal exports. The US outproduces them, but we use a lot of it domestically. And so with Argentina, the question becomes, do they back out of the world export market when it comes to meal? Do you see China come to the US and try to access some supplies? So when you look at soybean meal right now, that market's rallied $41 here in the last week, and 16 and a half of that came yesterday. So
sounds like
gasoline,
and crude, the meal's leading the whole complex. Why don't you tell our viewers what meal is used for?
Soybean meal is a heavy protein feed source. So basically, a lot of it is fed to all livestock. Anything that needs to eat and grow eats soybean meal in some sort of capacity, I guess. Maybe not 100%, but it's a pretty common feed ingredient. It's probably the most common, and it's just a byproduct of what you get when you crush soybeans. So soybeans really, from an overall fundamental standpoint, it may not be exceptionally bullish, with the big Brazilian crop potentially coming on, but the product's been leading the way. We had soybean oil first leading the way, and now we've got the meal running the show, and so it's been fun to watch, and it's been great for farmers to kind of grab some of the marketing opportunities that they may have thought passed them by.
I look at a monthly chart of beans, and I see one drive, I see two, I see an incomplete pattern that opens my eyes to the possibility that a new high over 18 is viable in the months ahead or the years ahead. So why don't we talk about how wheat has really been underperforming, because all the fundamentals I read based upon the bread belt in the grain belt in Ukraine is that the crop's going to be down another 40% next year, and all kinds of grain production levels have been cut because of the warm weather in Europe, and I believe it was India has shaved 10 tons off global production. So there's all these weather events happening around the world, and you just brought up another one, Argentina. Why is wheat under pressure here, Angie? Could it be just what is it?
Well, Russia has a lot of it, and a chunk of it has come because the Ukraine plants, or the bulk of winter wheat's planted in the fall. Ukraine plants the bulk of their wheat as winter wheat. So it was planted in the fall of 2021 ahead of the invasion by Russia. And so the bulk of Ukraine's wheat area, 1/3 of it, or not the bulk, 1/3 of Ukraine's wheat area sits, basically behind where Russia had invaded, or sits in the area that Russia had invaded. And so Russia, and there's a certain Russian ag analyst that'll argue with me to define what Russia means in this sentence. But basically Russia, it's estimated that they kind of took and are exporting, around 6 million metric ton of wheat out of that region, as their own. That can't count for Ukrainian production, obviously, because Ukraine's not the one that's marketing it. But then on top of that, Russia had a record large crop last year. And they're really kind of pushing their export capacity.
They need the cash to finance the war.
Exactly. And the UN's been pushing that you need to kind of facilitate these open, grain pipelines. And so there's this idea that even if you were to see some sort of interruption, similar to what we saw there when Russia withdrew in late October, early November, when they withdrew from that Black Sea corridor, and you see the move higher that we had, it lasted for about 3 days. And so there's just kind of this sort of assumption that, the production's down out of Ukraine. There's some issues in Argentina, but at the same time, you have another record crop coming out of Australia. The European wheat crop was hurt, but much of the heat and dryness came in mostly to affect their corn crop, because European wheat exports have actually been up substantially. Now, they've probably exported themselves out of surplus wheat, so to speak. So the question now becomes, if the dollar were to continue to weaken, which a lot of folks aren't necessarily seeing that, and I'm in that camp where I think the dollar finds support and kind of remains a little bit strong. But if you were to see the dollar continue to weaken and our logistical capacity kind of improve as you see the river levels come back up, you could see U.S. wheat become competitive in the global market, which would obviously probably send us back towards 8 to 850, relatively quickly. But one of the biggest things that we're seeing is just overall wheat demand as a whole is starting to slow, or at the very least, you aren't seeing the kind of concern over a loss in supply availability. You aren't seeing global end users just clamor all over themselves out of fear of not being able to access supplies. And that's the same, in basically any commodity right now. And so just that fact alone is keeping some pressure on wheat. But
China was a big buyer of wheat for many years, up until the pandemic.
No, they're still buying a good amount of wheat. They had switched over and started making some purchases of broken rice, but India banned that as soon as they caught on to what China was doing. But I feel like China, and Russia have a relatively close relationship. And so you're probably seeing China source a good amount of their wheat relatively cheaply from Russia. And that's just kind of helping alleviate some of their needs to turn elsewhere, because Russia had 101 million metric ton crop, if you believe, their analysts, and there's other traders around the world that believe it. The USDA is lagging in that simply because they're still honoring February 24th boundaries in Ukraine. So they're not really counting that wheat that was lost necessarily. So the USDA is kind of lagging on that estimate. But, to put that into perspective, that's substantially higher than what their previous record crop was. So it's an interesting dynamic that the country that we don't really want to be dealing with actually has the most available, plentiful, and cheap wheat supply, as it stands currently. So it's just kind of this sort of tug of war over where we need to go fundamentally. But yeah, I feel like wheat is way oversold, but no one seems to care. Yeah,
well, they will. All you need is a green weekly candle, and I think you have a bottom. You mentioned La Nina in relation to Argentina, and that it may dissipate. What if it doesn't? Is there the potential for the U.S. Grain belt to be affected? I've seen years where La Nina has caused excessive dryness. Maybe the drought we have here in the West, I'm in California, spreads to the Midwest if La Nina persists.
Well, you've seen that drought. We saw some substantial production losses in the Southern Plains this year as a result of La Nina staying relatively entrenched in the weather patterns that we had seen. So that's why you see Texas, Kansas, Oklahoma. You look at the drought map, you can see that all the way up into Nebraska, into Iowa, you dealt with some pretty extreme drought. As a matter of fact, drought spread across, I think at one point it was up to 70% of the grain belt was under some sort of classification of drought. If La Nina does break down, it's supposed to help open up some of that atmospheric flow that could bring some moisture our way. But right now models show that it should as we work into January. But we played that game before. We've been told La Nina is going to break down at least once, if not twice, over the last 3 years. And we're now entering into our third winter season with La Nina present. So
is that a record? Some kind of record? What's the longest stretch?
I think this is it. Yeah, I think it's.
You know how many times unprecedented comes up when you talk about things nowadays, or
oh my goodness, I know.
Yeah, it hasn't come up and hasn't happened in 100
We've never
years.
seen this before. Yeah, I feel like that's a pretty common story for the last 2.5, 3 years. But so La Nina breaking down is going to be super important. There is some talk that you'll see La Nina not only break down, but transition to El Nino. El Nino is far more compatible to global grain production than anything. And so if we were to see that happen, and it were to happen by next spring, then you could see a pretty sharp transition away from worrying over crop production to wondering where we're going to put it all. But obviously that takes a lot of time for us to get there. And the weather forecast is probably going to change a million times before we do.
Okay. What a great summary of grains. Anything specific to corn that you want to touch upon, Angie?
Yeah, I mean, our biggest thing right now is corn exports are running about half of what they were a year ago. China is looking to source a pretty substantial amount of corn out of Brazil. The question now becomes, though, we are seeing import margins improve in China to where they could start bringing U.S. corn in. And so, obviously, sales have been slow because of the strong dollar and because of our currency conversion and competitive, supplies out of Brazil. And so now we're going to be watching really closely to see if we start to see some inquiries from China, March forward, now that there's positive import margin.
Yeah.
So that's going to be something to stay tuned and pay attention to.
Yeah, because technically it looks like this would be a correction that long-term technicians would be looking to enter on the long side from the rally we had from last summer to the recent highs. So
Yeah.
between here and 620, and then you're wrong under 580 for a potential position on corn. I would rank relative strength, of course, beans leading the way, followed by corn and then wheat. You
Mhm.
see it that way?
Yeah. Yep. I agree. Wheat has been the dog. And so it's drug corn with it, but corn's also had its own story with poor exports and things of that nature. So definitely been something it will be something to watch.
Yeah, I mean, what you do with what's happened recently is really important to the whole picture. I mean, who wants to have bull markets in grains based upon growth, which leads to suffering? So, but we have to, be aware of the trends. And if you like the grains, I think they're a great technical market to trade. In my view, I've always liked the way they chart, and Angie could be really a good source of information, as she's demonstrated today. Do you have any kind of letter to keep people in?
Yeah, you can find me
touch?
on Substack now, at Goddess of Grain. You can just check it out there. I'll link it on my Twitter account too. It's on my pinned post. But if
Okay.
you want to reach out to from the website, we can get you set up that way as well.
Okay, Goddess, I bow to you for coming here and gracing us with all your wisdom about agriculture, Angie.
Well,
Really
thank you for
appreciate it.
having me. I always enjoy it.
All right, Angie. Have a great holiday season. Merry Christmas. Happy New Year.
You too.
And
We'll see you after. We'll see you
yeah,
after the first of the year.
I think we'll know whether or not La Nina is going to be here or not.
Yeah. Yeah, I
Okay.
can't wait to get some answered questions, only to have more unanswered ones.
Thank you,
So,
Angie.
thank you.
Appreciate your time. Angie Setzer, everyone, follow her on Twitter at Goddess of Grain. And that's going to be a wrap today, everyone. You could join the team in about 25 minutes on the Morning Edge. Remember, don't just count your bushels, count your blessings. And we'll see everyone tomorrow. Thanks again, Angie. Cheers, Paul, Monica, Patrick. See you guys tomorrow. Going to have some shredded wheat. Okay, it's very good fiber. Okay, see you, Monica. We have to have fun here too, right?